Thursday, December 8th, 2022, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at how the gilt market or the UK government bond market is not out of the woods after the crisis we had back in September, October. I think interest rates in the UK and bond yields are going to rise a lot more. They have come off a little bit in the last month or so, but yes, we're going to have trouble ahead for the next 5 years. And it's not me just talking about that. Before we look at that topic, just a few things going on here. I saw yesterday that China, the People's Bank of China, actually announced that they bought 32 tons of gold in November. There's been a lot of speculation about anonymity of the buyers. I think the World Gold Council announced a few weeks ago that in October, I think there were 400 tons bought, and that most of those were anonymous. The buyer chose to keep it quiet. I think it was about 300 tons of that. Yes, this is only 32 tons, but the Chinese could be buying a lot more, and they could have a lot more than they announced publicly. According to Christian Gopal, who's an analyst at the World Gold Council, and I actually recommend you follow him on Twitter. He brings out information about central bank buying quite regularly. He thinks China only increased its official holdings to 1,980 tons, which isn't that much compared to other countries and even to Russia. That's not to say that they could come out like next month and revise that completely. That's how the Chinese work. Some people think they have like 20,000 tons instead of just under 2,000. So I thought I'd put that out there. Some people think it's irrelevant, that China diversification won't have any effect on the dollar. Some people think it is. It shows that this talk of gold for oil could be pushing China into that. So I'll put a link to this article from Kitco in the description if you want to read through it. The other thing we're going to do today is look at your questions again from last week, compiling some questions in the comment section, and I'm answering them the week after because we're getting more and more comments, more questions. Sometimes I miss them. Sometimes I try to answer them myself in the comment section. So this is from UK Economic Collapse is Underway, part 4. And this is from Jimmy Grant. Jimmy says, how many parts are there to this collapse? Well, the thing is that things are unraveling, Jimmy. We had the energy crisis back last year, and I said that would trigger a collapse. And now we have like the whole public sector almost on strike. Not the whole public sector, but we have nurses. We have like the ambulance drivers, and we have the rail strike as well during Christmas. Things are going to get worse, I think, and even what I'm going to talk about today about interest rates in the UK, that's going to keep things getting worse and worse. And the reason I say part 4 is because I'm covering this through my videos, so I want to compile like a playlist so people can go through it. This is from economic data on both sides of the pond, pointing to trouble ahead. And this is from Viatorum di Effa. The question is, a question to all you wise guys and gals. I have a 10-year fixed mortgage. Does it make sense to pay off the loan quicker in an era of high inflation? Or should I invest the cash in other hard assets and let inflation devalue the debt? So maybe some of the viewers answer that question. My view is that as long as you can pay off debt, I try to pay off debt. Well, I don't have any debt anymore, but if I have savings and I know interest rates are going to go higher, and I have a floating rate mortgage, or in your case, you have a 10-year fixed, but yeah, a combination of both things would be good. I say you always do like a combination. You don't have to do just one. Maybe invest in hard assets and precious metals. I think precious metals are going to do very well. And I recommend not just via Turim, but also you to watch a video interview I did with Steve Santangelo of SRS Rocco Report last night. I published it last night. If you haven't seen it, I'll put it up in the cards. And he talks all about what's going on in the world of energy, finance, and precious metals. I think you'd be interested in that. So to the next question, and it's from the same video. It's the pond video, economic data on both sides of the pond. And it's from Roger Dodger Lowe. What does he ask? As always, great reporting. Is the BIS actually a legal central money laundering holding company? Yeah, the BIS is the Bank for International Settlements. Roger Dodger Lowe, it could very well be. The Bank for International Settlements is in Basel, Switzerland, but it's a bit like the Vatican or Washington, D.C. It's supranational. It's within that country, but unless someone in there commits a crime like a murder in Switzerland, they've got no power to come in the Bank for International Settlements. So yeah, that could be going on. It was created by a treaty by the major European countries and major US banks, as I've spoken before. More importantly, I think the BIS does a lot of trading that the central banks wouldn't be able to do in their own domestic jurisdiction. But money laundering is possible. Anything's possible. We know the Vatican Bank did a lot of money laundering, and I've got a book here about that I'm still reading. I haven't finished, but so I wouldn't be surprised. So from the same video, this is from Mark Williams. Good day, Mario and Billy. When you go over the commodities, do you think you could add platinum also? Thanks in advance. Okay, the platinum price. Okay, we can go through that, even though I don't follow platinum too much. So we'll do that in the general commodities. So back to the UK and the fact that the gilt market is not out of the woods, and I've been thinking about that. The fact that UK yields have corrected back down. We saw them spike massively back in towards the end of September, beginning of October, and then we had a new government, a coup d'état in the UK, where you had some guy that was not supposed to be prime minister, wasn't even elected by the party, the whole Conservative Party. He took over and he brought in someone called Jeremy Hunt. So it's like a caretaker government, technocratic government, and they've tried to calm the gilt markets down, and they have to some extent. But I read this a few days ago, and I've been meaning to speak about this because it's very important. Because what we need to understand is that the whole economy in the UK and also in the West and the whole world in the fiat currency system is highly dependent on cheap credit. And if interest rates are rising, yields are rising as well. Government debt that comes for renewal or for reissuance, governments are going to be paying a lot more, and they're going to be paying a lot more interest. They're going to have to issue more debt, and the debt increases. And people forget that these governments, especially the UK and the US as well, and many others, the only way they can pay off old debt is by issuing new debt. So if yields are rising, they have a problem. And that affects all other asset classes like mortgages, corporate bonds, financing for consumers. So the economy is not going to get better. The chancellor is not going to get as much tax. So I think it could be very troublesome. And the other problem as well that this article talks about is that the Bank of England, who's become a huge actor in the gilt market, the main buyer, they're supposed to now sell off their balance sheet. And that's why I think I'm not too convinced about that they're going to do serious QT. If anything, I think they might have to come back and do QE. And when they do that, we could see the pound come off even more. Yes, the pound has rebounded from like a low of 103 to around 120 right now. But longer term, yes, just like other fiat currencies, its purchasing power is going to go down the drain. And that's why I keep stacking. That's why I have been doing since '02. And this is not advice, of course, but I think if you leave a lot of savings in the bank, if you invest, if you have pound balances more than what you need, yeah, it's going to be like decimated in terms of purchasing power over the next few years, mainly because the Bank of England as well is going to not raise interest rates to the required level to bring down prices, or what people call inflation, or CPI. And I think this is all part of writing off the debt at your expense, at investors' expense, at workers' expense. And that's why we're seeing a lot of strikes. The higher wages that these unions are demanding and workers are demanding don't cause inflation. They're demanding that because of what the government and the Bank of England have been doing since 2008, and that's deficit spending, money printing, manipulating interest rates lower. They've debased the currency, and workers feel it, and that's why they demand it. And of course, it's like a vicious circle, because if they demand higher wages, prices will go up. But it's not them that have caused the inflation. One of my viewers sent me a message on Patreon, and he said, yes, it's outrageous that they're going to blame the unions and workers for inflation. He said it's like blaming a cockerel for the sunrise when the cockerel in the morning. So that's what is happening. So let's quickly go through this article here in the FT. And sometimes they do write good things. I know they've written about a lot of fake stuff, fake news about gold in the past. Who is going to buy? UK set to unleash a historic debt deluge. Government will need to issue around 240 billion gilts a year for the next half decade to finance its spending. So yes, there's a few people they talk to. Some say it will be okay. Some say it's apocalyptic. So I lean more on the side of apocalyptic. I think it's going to be a disaster for the UK economy. And what's the only way to attract investors to buy your debt? Well, it's to make it more attractive. How do you do that? Well, you have to offer more interest. And that's going to make it so that the government is going to have to borrow even more, because we're running budget deficits. We're not running surpluses. And it's going to get worse. And you can see here by this chart why it's a deluge compared to prior to the '08 crisis. UK is going to be issuing like 6 times more gilts than it did back then. And even compared to until recently, until before 2020, it's going to be issuing like five times more in some years. And this is a Citigroup forecast, and it could be even worse, I would say. So here's the whole problem. The Bank of England owns more than a third of gilts. And you can see that prior to the '08 crisis, the Bank of England didn't own any gilts. Why do they own it now? Well, it's all about the QE, which Ben Bernanke said is like, we can do it. Doesn't cost anything. We just can print it out of thin air and buy the bonds and keep interest rates low and push the economy higher. But now, yes, we're going to have to pay for it. And as I said, unless the Bank of England does a U-turn and starts doing QE again, I think things are going to look very dire for the UK economy in the coming years, and it's all to do with yields and interest rates. And as I said, yes, the markets have calmed down, as you can see here. The blue line is the UK 10-year yield. It was below the US 10-year prior to the crisis at the end of September, and then it spiked above it, went to 4.5, came back down to 3, but now it's picking up again. And this article says that people expect it to have to go back above the US 10-year yield to attract investors. This article also talks about the DMO and the BOE. The fact that DMO is the Debt Management Office, who does the selling of gilts in the markets. And when they sell gilts, they issue gilts. And the BOE, they're selling gilts every day. So there's a huge overhang of these government bonds over the market. And as I said, it's going to permeate in the whole economy. You can bet mortgage rates are going to keep going higher. Is it any wonder they put like a little clause to help people in the budget? They put a little clause in the budget to help people with their interest payments for their mortgages next year. And the way they're going to help them is the government is going to lend them money, so keep them in this game. So yeah, you could say this is part of the UK economic collapse, and it just goes to show that the era of low rates, low interest rates is far from being over, even though some of the analysts interviewed for this article say they expect disinflation, they expect inflation to come off and everything to be normal again, and demand for gilts to pick up. And the other thing they say, the defined benefit pension industry and the LDI scheme, they were a great thing for the UK government, because there's heavy demand for that for a decade or more, because they had to match their liabilities and they're buying longer term gilts. But now these defined benefit pension schemes, they're closed off to new members, so that demand is going to go away as well. So it's not just the Bank of England. So with that, let's quickly look at where the markets are this morning. It's 8:45 a.m. London time. We've got spot gold at $1782.50. It's down about $3.50. High's been 88, the low's been 81. Silver's unchanged at 22.72. High's been 80, low 53. So fairly steady, narrow range overnight for the precious metals. The stock markets, again, very quiet overnight, so I won't go through them. They're virtually unchanged, the futures. To the currencies, we've got sterling down about 1/10 at 121.89. The euro's up 1/10 above 105 at 105.18. The dollar's up 0.2 versus the yen at 136.92. The Swiss franc is unchanged, or the dollar versus the Swiss is unchanged, 94.07. And the dollar is unchanged versus the yuan at 696.81. To the other currencies, Aussie dollar is unchanged, 67.20. And the dollar is up slightly versus the Canadian, 136.73. Kiwi dollar is at 63.53, unchanged. So all fairly quiet on the Western front, so to speak. We'll go to the general commodities now, and we'll look at platinum. So where have we got platinum? It's at 1,007, bid at 1,012 on my system. It's up about 1/3% platinum, so there you go. That's spot platinum. WTI crude is up just under 1% at 72.80. Brent is up 3/4 at 77.80. High grade copper is up 0.4 at 387. U.S. nat gas is up 1.75% at 576. The Dutch nat gas futures is up 3.8%, and we are at 155. So that's continuing, to creep up. We're going to finish and we're going to look at the bond markets. We're going to start with the U.S. Treasury 10-year yield. Yeah, that's up 5 basis points at 346, but it is continuing to drop off quite a bit. Yesterday we were around 352, so it actually dropped quite significantly yesterday, down to around 340. The 2-year is at 428. That's up about 3 basis points. And let's quickly look at the UK gilt market. Well, the 10-year yield is up 7 basis points at 312, and the 30-year, which got up to above 5% during the crisis in September, October, that's at 353, but it's up 8 basis points. So there you go. If you enjoyed this video, make sure you hit the like button. And with that, I wish you all a great day. Take care. Bye.